Also put the spotlight right back on gold as well as silver today, because you do have gold clawing back ground. When you talk about gold prices, climbed over 4.2% after that 4.8% decline coming in the previous session. When you talk about what's leading this sort of uptick that we've seen, it's actually a wave of buying that you're seeing coming in from Chinese speculators, supercharging this particular rally. And silver has also staged quite some rebound, because you're looking at a rise of about 8.1%. You're looking at that $85 an ounce level back in focus when it comes to silver as well. But let's also talk about the gold demand trends that are in focus right now on the back of total gold demand crossing 5,000 ton for the first time ever. That's something that you're looking at. Other than that, what's really happened here is that investment demand, in fact, remains the clear bright spot, and that is according to World Gold Council. Let's also take a closer look at some of the trends that are indicating for the fourth quarter as well as 2025 as a whole, and what the path from here on is going to be looking like. Sachin Jain, Regional CEO, India, World Gold Council, joins us on the show right now. Mr. Jain, thank you so much for taking time out, and a very good afternoon to you.
Thanks so much for having us on the platform. Really appreciate it.
It is a very interesting report that you have. You do have a bunch of brokerages that are taking note of this particular report, remaining positive nonetheless. But you do actually have UBS also highlighting that this sort of indication when it comes to demand is actually crucial in terms of the way that they're basing their forecast for gold as well, to be quite bullish above that $6,000 an ounce level. In terms of the key highlights here, what I wanted to firstly understand is that you're talking about how demand remains quite robust. Is it across the board that you're looking at? What are the key highlights when it comes to demand here?
Shansi, maybe I can give your viewers a bit of an idea of what's happening globally, and then we can talk a couple of minutes of what's happening in the Indian context. So as you mentioned, globally, for the first time, the demand crossed 5,000 tons. And that's very interesting, keeping in mind that the prices of gold last year were at an all-time historic high, which actually resulted that the net increase in the demand of gold from a value perspective was up 45.5%. So that's massive. Largely, this is led by investment demand, which crossed about 2,175 tons. But again, dramatically up on value. We saw a consistent demand on technology, and that's largely to do with the AI chips. And as AI gets more and more democratic, the faster chips are using more and more gold. The third and the most important area that has been is jewelry, where we've seen at a global level almost a significant 22 to 23% decline in volume term. However, in the value perspective, they're still up about 13 to 15%. And that's very important because a jewelry consumer behaves in a way where there's certain budgets that consumers come out with. And the other pillar of demand has been the central banks, which has been at about 873 tons. And very interestingly, this did not cross 1,000 tons, which happened in 2024. But where we ended, again, gives a strong throughput of what's happening in the world of strategic investments as countries are investing and central banks are investing. Now let's jump quickly in what happened in India. India, the demand for gold last year was about 711 tons. That's down from 802 tons last year, so about 10 to 11% decline in terms of value, in terms of volume. However, in terms of value, we saw quite an upsurge of about 30%. Again, if I break this down in jewelry and investment demand, in jewelry, we saw a 24% decline in terms of volume. And again, resultant increase in terms of value is about 13.5%. If you look at investment demand, particularly, we saw an upward trend of a good number in terms of, let me just read that out to you, was about 17%. And from a value perspective, it was 73% up. That is very significant and really reflects on the interest of the investor class. And lastly, very interestingly, whenever we've seen historically the price of gold going up, we also see that recycling, which is in our terms is gold getting converted to cash or any other investment class, tends to become higher. However, we've seen that 19% decline in the recycling of gold, even at these historic prices, which firmly believes or indicates that consumers and investors believe in the category and are staying put. So that's broadly what's happened globally. And then I can deep dive on any questions that might interest you.
And what really stands out to me is that consumers seem to be choosing to retain their gold holdings, and this is despite those record prices that you saw coming in. If you go by the recycling numbers for gold, at least in that particular quarter that you're looking at, you do have that recycling trend that also stands out. We'll come to the jewelry weakness as well, but firstly, I wanted to try and get a sense of what you think about the numbers when it comes to recycling.
Well, I think from a recycling point of view, there are two things of recycling. One number that we don't put on in our research findings is consumers coming in and buying gold or old gold to new gold. And typically in 20 up to 23, 24, as in year 23 and 24, we believe that the recycling was about 20 to 25%, and that we believe would have crossed 40% in 2025, which means old gold getting converted to new gold. And that's a great sign that gold is not just sitting in the lockers. People want to upgrade their old designs to new designs, and that's great for the industry. That's one part. But the fundamental belief in the strength that gold holds is purely to do with the core drivers of gold and the pillars on which gold pricing is based on. And that's the current geopolitics that's triggering it, the de-dollarization that's triggering it, the global debt, which I think is a fundamental reason why the confidence on US dollar is reducing. And hence a lot of reserves are converting into gold. And that fundamental is going to be staying on for not just in 2025, but will stay on for longer. And I think hence the core pillars on which the gold price is built on strongly is in favor of gold. And even if you look at the last 2 or 3 weeks of volatility that's happened, we always at World Gold Council we talk about gold as a long-term diversifier of your portfolio and a long-term strategic asset that makes your portfolio healthy. And I think if you look at gold from that long-term longevity and that strength, I think it holds very strongly in the current economic situation.
Another, and when we also double down on the entire categorization of demand, right? You do have investment demand that is quite important to look at. It seems to be the clear bright spot, isn't it?
Absolutely. I mean, if you look at what used to happen 30 years ago, I mean, just 3 decades, central banks were the net sellers, and the main usage of gold was jewelry. Fast forward to today, investment demand, central banks buying jewelry, technology is a different, it's a sectoral shift of the consumption. But as you mentioned about investment demand, last year, as in year 2025, a calendar year, the investment demand crossed 6 trillion US dollars. I mean, just pause and think about that number. If I were to translate that in INR terms, we're talking about 18 lakh 70,000 crores worth of gold that got transacted on a daily basis. And that makes gold as the most liquid asset on planet Earth. So you're absolutely right that investment demand is a very important sort of segment. It's growing, and I think with gold getting in more and more technological savvy, I believe in the coming time gold will be the new gold, and there will be a lot of confidence in technology by which this will be a comparable asset class to any other modern asset class, which will be accessible, which will be authentic, and could be sort of fungible across countries, across industries, across people, and those are things that are coming up.
Well, absolutely. And Mr. Jain, largest asset by market cap for a reason, right? That's gold for you. But quickly before we let you go, I just wanted to get a sense of what the picture is going to be looking like from here on. The sense that I gather is that jewelry weakness perhaps is likely to persist. But what are you, understanding in terms of demand going forward as well? What are the trends indicating to you, just to wrap up?
I think, I wouldn't say jewelry demand is weakening because, of course, from a volume point of view, it's going down, which we've seen last year. But what we've not given to the consumer is a bit of pause on the pricing and so on and so forth. I mean, today a consumer walks into the jewelry store with a certain budget. The budgets haven't gone up with the same ratio as how the prices of gold have gone up, and that they have to catch up. But the interest of consumer on gold jewelry and jewelry in general is an all-time high. So that continues. Having said that, I think the investment demand will certainly go up. And I think modern assets or asset classes like ETFs, which today still are very popular in the financial circuits, but a simple human being or a simple Indian on the street that has a very low awareness of these forms of investment, which are great, which are regulated, are backed by physical gold. And I think these forms of investment will go and take a lot of stride.